NIO Stock, one of the most hyped stocks in 2018 and looking to be one of the most hyped stocks in 2019, just reported their earnings last night, and I thought it would be perfect for us to go through a deep dive, bring back the deep dive series with NIO Stock today. Let's go. Alright, so getting right into it, guys. If you appreciate this video, drop a huge like down below. If you want to see a different stock covered on the deep dive series, maybe for next week or the week after, leave that in the comment section down below. Getting right into it, I thought I'd go over NIO Stock, something you guys have been requesting. So let's get into some of the numbers and the figures here. So NIO, if you're not familiar, is actually a Chinese electric vehicle car maker, and they're focused pretty much on autonomous all-electric cars for the Chinese market currently. They were founded back in 2014, and in just 4 years, they've put out a couple models that they've produced and are ready to sell. The biggest ones are the EP9, then they have the ES8 and the ES6. The EP9 is a full-fledged track car meant for those racing days, whereas the ES8 and the ES6 are SUVs where they want to target the regular consumer who wants a 7-seater or a 5-seater SUV. So NIO actually IPO'd back in 2018, like I mentioned, and was one of the hottest stocks of the year. Almost every single financial YouTuber or investing community out there covered the stock because, quite honestly, it gained attention and every investor was interested in this company to see if they could potentially be the next Tesla of China. Now, the one big thing here I want to point out right off the bat is that since it's a Chinese company, I believe that the Chinese government will really be pushing NIO to succeed. The Chinese government wants to have an all-electric future, and in my opinion, because of this, NIO is in a very strong position to potentially succeed over the long term. But that kind of brings us to our next point, which is the competition. The biggest threat to NIO, in my opinion, is our beloved Tesla. Tesla has begun selling their Model 3s in China, which is a serious threat in my opinion to NIO, as they currently do not have a comparable, affordable car for the masses. NIO does not even have a car currently. Both of their offerings that are more targeted to the general consumer are SUVs. So Tesla also has a stronger balance sheet when you compare it to NIO, which we will go over soon. And Tesla can afford to spend a lot more to keep prices lower to attract more customers in. And when you look at NIO, they don't have the same luxury because, like I said, when we go over their balance sheet, you'll see the position that this company is in, and it may concern you if you're an investor currently in NIO. So before we get into that, let's kind of recap what was covered in the last earnings report and kind of go from there. So first off, you can see here that they reported revenue of just under $500 million in the quarter, and quarter over quarter, that's up over 100%. Amazing stuff there. But when we look at the GAAP net losses, you can see that they came in at $500 million in loss last quarter. So that's a huge loss. They actually lost more than they brought in revenue. The operating expenses have just been piling up and really contributing to a lot of these losses. That came in at $503 million versus $511 in total losses. So again, operating expenses were up 28% quarter over quarter. Operating loss was $501 million. And as you can see on the far right here, they say that they currently have cash and short-term investments of around $1.2 billion. Again, we'll get more into that in a few. So just like other car manufacturers like Tesla, the main metric that investors want to look at is how well are their cars selling, how many are they producing, and that's kind of where this company is judged on. So if you look at the far left here, you can see that there's a production number and delivery number. They were able to produce and deliver well over 7,900 ES8s here in the last quarter, which is pretty impressive. And when we look at the far right here, we can see that their projection here for the next quarter is actually going to be down quarter over quarter. They're predicting between 3,500 and 3,800 ES8s, which is a significant drop here, and the reason is because the Chinese market really is struggling right now and people aren't really willing to spend as much on brand new cars. As a result of that, their revenue is also expected to drop significantly in the next quarter, but like I said, we will get into that in a few minutes. Now, in terms of what analysts think about this company, there isn't really too much going on with NIO. Most hedge funds will not really invest in a company that's just been on the market for a few months, don't really have much to show for on their balance sheet, the Chinese company at that, and they're still unprofitable and burning cash. A lot of hedge funds stay far away from these companies. But that being said, there are still a few analysts that have put out a few ratings here over the last few months. The average rating comes in at around $7.73 per share, and this is of course data tabulated from tipranks.com. So if you're interested, you can go check that out. Link will be in the description down below. Looking at their technicals here as well, again, not too much data to go on. They've only been out since around October last year, shooting up from under $6 per share on their IPO day all the way up to almost $14 per share, but currently the stock sits at just over $8 per share. If you look at the charts, you can see there's massive support at just under that $6 level. So if I were to enter the stock, not saying I will, not saying I won't, if I were to enter this stock, even if it was for a swing play, I would be looking at prices closer to $6 per share. Now you can see before the earnings report, which was released, you can see the stock actually took a massive jump up the last few days, created a gap, and then today after the earnings report, disappointed with the guidance, they actually came back down and filled that gap. So again, it's a very highly volatile stock here. You can see that it moves massively on news, massively on potential. So if you are investing in this, you have to keep that in mind. You have to be aware of those risks. Looking at the fundamentals here, again, NIO is not really a profitable company right now. They don't have a current PE. They don't have a forward PE because of this. And of course, they don't pay out a dividend because of this. Now, if you're looking at NIO to be a dividend stock at some point, you might be waiting for a very, very, very long time, if ever, that a company like this will pay out dividends. I know when you look at traditional companies like Ford and GM, they pay out a lot of dividends, but they've been at it for years, and NIO is also going to go through those same growing pains. Now let's get into some of the fun stuff and kind of start to see where the business could actually have some faults to it. So currently NIO has around 1.23 billion in cash and investments. Their debt is around $441.86 million. So the cash debt ratio sits at around 2.784, which is pretty good when you just look at this metric right here. So NIO has over $1 billion in cash, but the problem here is that that debt load is pretty big when you consider the amount of losses that the company is incurring every single quarter. In my opinion, the amount of money that they have is not going to sustain them for very long if they continue at this rate of loss that they have been experiencing. And this actually could lead the company to a potential bankrupt state on or before 2020. Diving deeper into the numbers here, you can see that in 2016 and 2017, NIO actually did not report any revenue, but in 2018, they reported $720 million in revenue. So when you look at it from that perspective, they grew from pretty much nothing to $720 million, pretty much $750 million. That's some incredible growth right there. And the problem is, because it's Chinese stock, a lot of investors are very skeptical of these numbers. But in 2008, regardless, they did take a $1.4 billion loss, with operating expenses coming in at $1.36 billion. Most of the money that NIO spends here is on R&D to develop the electric cars and reduce costs on these cars so they can actually start making a profit while selling these. Now, when looking forward at the Q1 2019, like we briefly looked over, deliveries of the ES8 are expected to be between 3,500 and 3,800 vehicles, which is a decrease of 56.1 to 52.4% from Q4 2018. Total revenues, like we talked about, is expected to come in at around 200 to 220 million or so, which again is a massive 50% plus decrease quarter over quarter. So a massive slowdown is expected in Q1 2019. So as China continues to struggle and consumer spending keeps drying up, the middle class does not want to spend their money on cars like this. NIO is going to be put in a pretty tough position and will be challenged here in 2019. So this kind of brings us to our biggest question: is NIO a buy? So in my opinion, NIO has a good vision for it. They have, the right direction that they want to go in. They have a sleek looking product, and they have a lot of hype around their brand. But the reality has started to set in, and that reality is that their cash reserves are depleting, costs are rising, and losses keep mounting. They're lowering their projected number of vehicle sales for Q1 2019, and that is concerning as it shows weakening demand for their products in the market that they plan to be number one in, which is China. Now, their biggest competitor, Tesla, in my opinion, has begun selling their Model 3s in China and started eating away at that market share that NIO thought they had pretty much the whole pie for. And soon Tesla will be announcing the Model Y, which is an SUV as well, competing directly with NIO's SUV offerings. So that'll be another dagger there for NIO to actually try to overcome. NIO currently is targeting that SUV segment with two different offerings, but in my opinion, they really need to focus on that budget all-electric sedan to have a realistic chance of actually surviving past 2020. The stock, like we talked about, is extremely volatile, and since it hasn't really been on the market for over a year yet, it'll continue to be volatile in 2019 in my opinion. So overall, as a conclusion here, what I would say is that NIO has proven to me that they can become profitable. We have seen another electric car maker, Tesla, become profitable will eventually over the last few quarters. But the difference is that Tesla does not have a serious threat, whereas NIO does have a serious threat, and ironically it is Tesla. The balance sheet for NIO is worrisome as a potential investor, and their cash balance is shrinking rapidly, which is another huge concern. So as a result, I personally would consider NIO a sell at these current prices. So guys, this video is short and sweet. Let me know what your thoughts on NIO is. I clearly am not bullish on the stock. I'm pretty bearish on the stock, especially at current prices. I don't know if this company will survive past 2020. If you disagree with me, let me know in the comment section down below. I will respond to every single comment regardless of what the comment is. Either way guys, thank you so much for watching. Don't forget to invest positively. Drop a huge like on this video if you liked it, and I'll see you in the next one. Peace.